3 Ignite Leadership Roundtable series, a very pertinent, I would say, theme what we have today, which is reimagining AI and analytics in insurance. And insurance is what I say is a very uh, uh, peculiar subject to pick up because it's as wide as it could be in terms of the various segments of insurance, and we will talk about that. More importantly, as a part of Leadership Roundtable, we have an ensemble set of speakers today, and apparently, our fortune that we are able to get speakers not only from very high industry relevancy but from adjacent industries as well with a very high experience in analytics AI. So I think it's a very diverse, heterogeneous, but very, very, I would say, significant set of speakers what we have today. Just to kind of introduce each one of them very quickly, we have Shivani from Reliance Geo, we have Shubho from Allstate, Javed from Uber, Sudhir from Affine, and Sanjay from Max Life. Now, each one of them in their careers have done a lot of marquee work, of course, in analytics and AI, because each one of them have been seasoned and a lot of, I would say, set of engagement, consulting, solutioning, and capability building they have done. More importantly, they have also solved very myriad, but very, very, I would say, unresolved complex problems of the industry and overall in terms of kind of creating that significant business outcome leveraging analytics AI. Now, let me set up a very brief context about what this roundtable series is all about, and particularly about this session. And then we'll hand it over to the speakers to give a brief introductions about themselves. I think one of the earlier adopters of analytics and AI, and you will see me using this nomenclature of analytics AI in the same continuum, and depends on the maturity of the organizations. But more importantly, since 2000 beginning, we have seen early green shoots of banking and financial services and insurance taking a plunge into analytics AI. Now that's gone through a various metamorphoses, specifically in insurance segment. Now, insurance segment per se has, I would say, a lot of aspects in terms of how it's evolved: risk, underwriting, claims, subrogations. I mean, these are the areas where there is a very heavy duty diligence which is required in terms of how insurance segment looks in terms of the claim settlements and also in terms of attracting and kind of retaining the kind of, let's say, consumers. More towards with the advent of digital transformation, we've seen a tremendous shift in terms of online platforms across different segments of insurance coming up, challenging the status quo of what I call the brick and mortar or very, very, I would say, established insurance companies. So essentially, if we see today from an insurance segment, there is a slugfest. The slugfest is about how the established insurance companies are trying to up the ante on the analytics AI side in terms of adoption, and how the new age insurance platform companies are actually giving a run for the money to the established one. So it's a very interesting kind of a segment. More importantly, as a part of leadership roundtable session, with the help of the speakers, what we would be unveiling would be true blue cases, use cases around analytics, AI, and insurance. And we will take some of these adjacent industries, how they're also influencing insurance segment per se from a adaptability and I would say the perspective of adoption from analytics AI. We would also talk about the emergence of new areas in insurance and how analytics and AI could prove out to be a kind of a Trojan horse in terms of taking it to the next level. So interesting set of conversations we will have. Let me just open up and have a brief introductions from all the speakers. Shubha, why don't you start, please?
Sure. Thank you so much, Sanjay. Uh, it's an honor to be present as part of this, esteemed panel. I head up data analytics and actuarial work for Allstate in out of India, and have a long years of experience. But apart from being in analytics, I would also like to call myself somebody a business consultant. The reason being that ultimately it's the business which is using whatever tools we bring to bear, and if we are not understanding the business and trying to solve its problem, the most powerful tool will fail. So that is my belief, and that also defines my way of the way I play my role. Thank you.
Okay, thank you so much. Sanjay, over to you, please.
Yeah. Thanks, Samir, for having me on this particular panel. And I'm Sanjay, and I head the analytics, AI, and business intelligence team at Max Life Insurance. I have been in the field of analytics and AI for almost now 15 years, and the way I see this particular field growing, I can just say that I'm a student who's trying to learn every day what new things are happening in. And one of the important roles that I play for my organization is that how we can solve business problems by leveraging data. Now, just to put it in a certain context, that the most important point of the way that we work is that for every work or every product that we are building, be it an AI model or analytics, it should solve a certain business problem, and there should be a certain value coming out of it. That's what my team does.
Awesome. Shivani, over to you.
Thanks, Samir. It's a pleasure to be part of such an honorable roundtable speakers and you. So thanks for inviting me. Just to give brief about myself, I'm in this industry for nearly 2 decades and been part of financial industries for nearly that time. I had very less experience as compared to banking and insurance, probably 7 or 8 years. But a major part of my experience revolves around how do I bring the AI driven automation into the system. Currently, I'm part of Reliance Geo and leading a lot of strategic projects with telecom, sports, agriculture, and healthcare industry, where a lot of insurance is getting utilized, and it's a kind of a hand-to-hand combination of these industries with insurance. So, thank you.
Great. Javed?
Hello, everyone. It's a pleasure to be part of this panel discussion. So, I have overall about 18 years of experience spanning across banking and financial services domain in my first 8 years, and then about 8 years in e-commerce, mostly with eBay. And then for the last 1.5 years, I've been leading Uber's data science teams in the areas of compliance, payments, and risk, and fraud fighting. It's been pretty interesting. I have been fortunate enough to work across different kind of industry functional areas and apply data and insights and solve like really interesting problems. So it's been a fun journey. So
Great. And not last but not the least, Sudhir.
Great. Thank you so much, Samir. My name is Sudhir, and I'm excited to be part of this conversation today. A very exciting topic. I lead the BFSI AI and analytics practice at Affine. At Affine, we take pride in building cutting-edge solutions for emerging business problems that our client faces globally. I have over 2 decades of experience, largely in banking, financial services, and insurance. Thank you so much.
Great. Must say that since I have a privilege of knowing each one of you, the introductions have been very modest. I know a lot of you, rather all of you have done so much significant work, and I'll make sure that it comes out during the conversations in some shape or form. Let me trigger the conversation and I'll open up with something which I think is very specific to the theme and specifically Shubho and Sanjay. I want you to take the lead, but Sudhir, Javed, Shivani, feel free to chime in as well. Now, traditionally, we have seen insurance companies taking the mantle of adoption of analytics AI with a slow pace. While the start was kind of very early, but the penetration and the whole aspect of kind of embedding it in the various value chain of insurance processes have been a bit, I would say, slow compared to other, I would say, industries, specifically from banking insurance. Uh, Give us some color around this, the flavor of the insurance landscape, how the last 5, 10 years in terms of this industry has been, what kind of challenges the industry has gone through, what kind of new areas of focus you have seen from a strategic side. Because this will actually provide a segue for us to take our viewers and audience through the whole analytics AI application. So, Shubha, if you would like to start, please.
Sure. Samir, thanks for touching on that very important aspect. When we talk of insurance, it's very curious that unlike other businesses, insurance itself is analytics. The very foundation of insurance is nothing but law of large numbers, probability, and of course, which used to be more from an aggregated numbers and to the actuarial science, not unlike the machine learning and data science of today's world. but nevertheless, ultimately it is at the core, it is analytics. So from that perspective, I would say that it was one of the earliest so-called large-scale business adoption based both in its products. What was not there, perhaps, unlike other industries, be it banking or retail or telecom, is analytics getting embedded or finding its way into the various functions of insurance. Analytics remained within the definition of its products, and beyond that, it was not so much adopted to optimize or to improve the efficiencies of the various aspects of business, be it knowing its customer or be it solving problems around claims. Uh, we must also remember that insurance from the very beginning, it's what I personally call it as a regrettable necessity, especially in the property casualty or the general insurance as it is called in India. Life insurance, it's a different flavor, but uh, primarily it is that a product which is bought and which is a more of a promissory note kind of thing. It's promissory product, and things go wrong, and then the is made good by the collected premiums from everyone. So that's a very foundational concept of it. Not really was the insurance companies were so much bothered about solving customers' larger problem. There was not much of product choices. The product varieties were also very less. Nevertheless, there were some pioneers who started exploring about 2 decades back about the power of analytics, and that is where things started. When, as you rightly said, maybe as a laggard, but nevertheless, it was coming into the product space primarily. So we talk about uh, the usage based insurance or pay as you drive kind of insurance which came in. So that was power of analytics at play, but it was on the product side. As the market changed or evolved with more players coming in and the risk profiles of customers becoming more and more complex due to the lifestyle changes, due to the assets customers own,
I think we lost the signal
uh,
from Shubho. Shubho, go ahead, please. Sorry, there was a glitch.
am I audible now?
Yes, yes, go
Yes.
ahead.
So I think in the last few years, definitely there is a significant realization that that same data on which the foundation of insurance has been built has been grossly neglected or underutilized, I would say, in context of revolutionizing the whole gamut of insurance operation. If I look at my company and not Allstate, I mean, I remember way back in 2019 or so, somewhere our chairman made a statement that I don't run an insurance company, I run a data company. So now that is the paradigm shift which happened in the last few years, especially when newcomers, the technology companies started showing interest, and it is still at a very nascent stage, but they are showing interest in getting into insurance business, which is a huge challenge to uh, insurance behemoths which are 80, 90, 100 years old, and they are sitting on a pile of data, sitting on a pile of experience, but how much are they leveraging? So from that perspective, I think it is coming around, and adoption is happening, and we will, as we go into the discussion, I'm sure that we will bring those particular areas to that, but I will leave others to comment on the larger
Sure, sure. I like the word what you said. Insurance is a regrettable necessity. Sanjay, over to you, please. Your views.
Yeah. So I think so. I will just build on what Subroto was talking about. So when you look at an insurance industry, unlike the banking or the financial industry, the amount of data that's being captured is technically, we don't capture a lot of transactions. So think of it in this particular manner as a life insurance. You're going to buy a particular policy, and then it's a once a year a payment comes in, and you have that thing. That's the only transactions that are happening in now. But what is essentially happening, and if you pick up, let's say, health and insurance, if you pick up property PNC, so that was the kind of a nature of the business. It was that the understanding has been that an proposal form comes in, you have to underwrite it, and then automatically an annual cycle comes through. Now, over the last few years, what we have started seeing is that in general, with the explosion of the data that is happening in with the mobile phones and the internet coming through. And the customer has started feeling that, that the amount of services that he's getting from different companies. So for example, we have the same customer who is getting grocery in 20 minutes. He's getting a same day delivery from the Amazons of the world. And so his expectation when he comes to an insurance company started coming is that, okay, why can't I get the same service? And that's how the most of the insurance companies started thinking that, okay, how can we, leverage data? How do we embed analytics in my entire value chain, apart from the product itself, which is, bases the pooling of risk. So if I have to go back and map the journey of like how we started off, we said that, okay, how do we get started? And we said that in the entire value chain of an insurance company, there are three important aspects. When we talk about, the first one is a distribution, wherein you actually have a huge sales force or you have partners who are selling the insurance product. The second is underwriting. And as you would have seen that we had a very, proactive approach towards claim settlement. So one of the important parameter in this entire industry is that what's a claims paid ratio, which means that how many claims come in and how much you pay up. So we are number one with 99.35, and we are the number one company within India in terms of claims paid ratio. And why it has been because we had a proactive approach of doing the right underwriting, which means how you can focus at the time of underwriting. How do you identify which all frauds are there, which specific case, which level of complexity should go to which kind of an underwriter. And moment, let the only bring in that cases or the good book onto your company books. So that was the important aspects of underwriting. There is customer retention. So we have a huge book, and if you start looking at, like I said, it's an annual business. Every year you have to pay, and this is one of the industry which is most unique in the sense that you have long-term contracts. When you look at life insurance vis-a-vis, let's say, a general insurance, in life insurance, it's a long-term contract. It's the only company industry wherein your contracts runs for, 25, 30 years, where the company is giving a promise, a legal tender that which says that if something happens to you over a period of 30 years and you die, we're going to pay back. So, and the way these products are being made and way these products has been constructed, it's just that during the initial years, because of the commissions and payouts and the marketing spends, you typically don't make money. You start becoming more and more profitable when the customer retains with you and he keeps paying you. He ensures that he renews his policies. So there has been a lot of focus in terms of how do you make the customer stay hooked on to the policy. Because a lot of time people do buy a particular policy, but by the next year, they forget about it or their priorities change, they don't actually continue. So the whole focus started coming that how you can use leverage analytics to actually ensure that all of these things, all the retention activities, how do you engage with the customer and which customer you should reach out to. So that's the second area. And the third and the most important is at the time of claims, right? So at the time of claims, how can you give them the best customer experience? While every customer would want his claim to be paid ASAP, but as an insurance company, you would want to know whether this claim has been fraud, whether it requires investigation. If not, it doesn't require investigation, how quickly you can get that claim to be paid. So when I look at the entire value chain, which means starting from how do you source policies, which is distribution side of things, how do you underwrite, the third being customer service and retention, and finally the claims, the moment of truth when the customer comes back and comes in. So all of these four areas have been impacted by analytics. It is kind of making an insurance company more and more efficient, more and more provide the best customer experience, because in today's world the customers have become seeing a very different kind of an experience coming from different industries. I think so Javed can talk about, you click a button and a car comes to you. They expect a similar kind of service from different industries. So that's what the power of AI, that's the power of analytics. And that's how I see that, like us, most of this industry is kind of embedding analytics across the value chain.
Sure. Now, I think two of the things which are emerging, and Sanjay, what you said is also apt, and we will rather discuss this in a much more detail about this whole proliferation of analytics AI in insurance and across segments of insurance. two of the things what I'm trying to pick up what Shubho and Sanjay you mentioned. One from a Shubho, it's all about the entire, and actually it's an oxymoron. The industry which is at the bedrock of analytics has not been that agile, if I use that word, compared to the other industries in terms of leveraging analytics and AI. And on the other side, there are humongous, I would say, opportunities which started getting triggered with this digital transformation where consumers got hooked on to mobiles and mobiles became the platform for the transactions. And insurance companies then also started working in terms of saying, okay, how can we actually have those first and second, or rather zero or the first moment of truth with the consumers? Now, that's a good, I would say, segue into some of these things, what you have built up, Shubho and Sanjay. Let me switch the conversation to the real meat of uh, the roundtable, which is about this analytics AI application in insurance. And I want to take two views, and I'll open to the all the five speakers whosoever want. One view would be which we should cover now, and please stick to that view because the next view would be much more, I would say, progressive. One view is what are the current or the previous AI analytics applications that you've been part of or you've witnessed, and the second view would be what are the future forward areas we see in terms of huge significance of analytics AI. So let's cover the first one, which is what you have currently observed or observed in the part from a value chain of analytics AI in the insurance, and then we'll cover the second part. So I'll just open, maybe Sudhir, you want to start, please?
Yeah, sure. Largely in insurance, we work with pricing. I think it's a very important, especially part of the underwriting. You look at how to price your product that much better. It's an area of competency, source of immense intellectual pride for any insurance player, right? I think that's very important. I think this is one of the very core, at the very core of insurance, which is actually what traditionally we used to see. And largely, whatever data the insurance company would have would actually be the you know data on which the pricing strategy, the underwriting strategy is completely built on. This is getting changed, and I'm sure that when we go into the next segment, we will talk more about it. What is actually disrupting this? We would also look at this from a distribution standpoint. How to acquire more, customers for the various type of products that are being sold. I think this is also getting disrupted immensely, especially by the big tech. So current, we have seen the distribution, all the analytics of what we used to do, and could do some, let's say, a prospect modeling on who would be the best person to solicit for the insurance product, for which kind of insurance product at what point in time. I think it's getting more real time now. But in the past, you would have some amount moment of reaction, but today that moment is actually getting compressed as we move forward. There is more instant gratification that people look forward to, like many others would actually concur. And obviously a rich internal view about how the customer has multiple products with insurance, a single customer view. These were the ones that were predominantly dominating the kind of AI and analytics in the past. But these are all being disrupted for a variety of reasons and for all the rightful reasons. As I think tech players are making a big foray into insurance and are really creating a game far above from what was being played earlier. I would invite the other panel
Sure.
members
So
also.
Shivani, you have worked with several insurance clients in the past. What kind of analytics, AI interventions, engagements you've been part of? If you can just enumerate some of them, please.
All right, and I think very well points we have heard from Sanjay, Shubho, and Sudhir, and all are pointing that traditionally insurance is probably one of the market leader industry in terms of adoption of data-driven insights and strategies, analytics. But I think, as you rightly said, that these verticals have started fast, but not they are in the leading era at this point of time. You talk about the different processes what we are having and the type of customer experience we have, right? If you talk about customer onboarding in even in insurance, it could probably it takes hours to days to week, right? But other industries have evolved where it can happen probably within a minute, within 1.5 minute time. Claim processing, there are a lot of I think players are taking a step where they are doing a proactive kind of claim processing, like in agriculture. A couple of countries in Europe, they have adopted where they in injection with farmers, they have a drone processing unit which actually takes the pictures of the farm on a regular basis, identifies what is the inefficiencies in the farming, and actually one gives the advice to farmers in terms of you need a better irrigation or you need anything extra from fertilizer perspective, but also finds if there are challenges in the productivity, and if any claim needs to be processed, it automatically even files the claim. So that's the automation which is going to come. I don't think it is gone in a very large scale or very big scale anywhere in the world, but that is the future what we are going to see, that it is not only instant claim but proactive claim where without any human intervention would be the future of this industry. I think we have all seen the, advertisement that you take a picture of the damaged car, send it to insurance companies, and it should process automatically, but that percentage is probably negligible. It's still in one digit where these automated processing are happening. So yes, I think as the industry is evolving, as the AI is evolving in this industry, these percentages are going to grow fast, and it is all driven by customer experience. If customers are getting best experience using these technologies, faster services, I'm sure I think in insurance industry needs to grow in that direction where we can do all these automation using all AI in the front seat of the industry.
Nice. Javed, would you like to share some perspective from your side? I'm just trying to jump the lane, and Uber are
Yeah,
quite
sure, sure.
relatable. So,
So yeah, I still remember when I was working with the banks in HSBC about
mhm.
12 years back. Then the customer data, the transaction data, that used to be a file that used to come once in a month. So if you wanted to create some trends, we have to wait for 1 month to refresh the trend, right? And now all these product companies like eBay, Amazon, Uber of the world, the data is getting generated like every second, and they have like hundreds of petabytes of data about every action a user is taking on their app and at the website, right? I think in terms of insurance also, I think similar thing. So Uber has streamlined the processes in that area in such a way that if a car, a Uber ride hits an accident, we don't have to wait for hours or days for the driver or rider to call us and report about the events, right? So we have established our processes, our ML models in such a way that based on mobile telematics or the vehicle related information which we again generate from the devices itself, our model gives us strong signals with a very high precision if a Uber ride meets an accident, and we come to know about that immediately. And we have built like several such models because safety is at the highest priority for Uber. So unless we can claim that hey, your Uber ride is safe, it will be very, it may be difficult to attract all sorts of riders to take our business, right? In fact, there have been claims by a lot of ride sharing businesses that the ride sharing vehicles are more secure and more safe than the private vehicles. It's been hard so far or difficult to prove that conclusively from the data point, but the companies are trying to do that a lot. For example, Google had published a data that their vehicles are a lot more safer, but that is on the premise of their being completely autonomous. So if it's the vehicle is autonomous, then what they do is most of the accidental claims come because of the defect or problem from the other side and not from the first party, right? So these are some nuances. But coming back to the topics of data and analytics, so when an accident happens, we have signals which we come to know, and we immediately provide roadside assistance and a separate ride for the riders and a team which meets the driver, and immediately we start a claim through our automated processes, which we have done it for all our driver partners, right? So we have built a product again which runs heavily on the data side, and and automatically it processes the claim, which is mostly heavily towards the third party insurance.
Great, great. Now, I think these are some very
Just,
topical
I,
areas
I
that you mentioned. Yeah, go
I
ahead,
like
Shivani.
little point what Javed is saying. I think telematics is probably evolving as we go by, and Corona also helped this industry to go. So I think if you open the European market with the Corona, I think they have evolved how the insurance policies are driven with the use of vehicle. So it is one with the pay as you drive, when you drive, and pay as you or probably how you drive. So I think those things are coming into the picture rather than having a flat policy. No matter you are even touching your vehicle for last 2 years, your policy can be evolved, can be a dynamic policy where people are using, giving the insurance premium with respect to usability and with respect to the quality of their driving.
Got it.
So
Now,
Samir, you
one
just
of,
wanted to,
go,
sorry,
go ahead, go ahead,
no, no,
Shivani.
if I go back to the way you split the topics and you focused on what we have seen in the insurance industry happening so far, and
Mm-hmm.
then you had to move into that, what are the possibilities. So I mean, I just wanted to make an observation that if we go back to the historical or traditional way of analytics adoption in insurance, it has always been more inward focused. So either to improve the products and making its pricing, the rates and all more profitable so that they get it. Because insurance is a very cyclical business, especially due to catastrophes and all. And both it impacts both the property casualty side as well as life insurance side. And there's a great reliance on the investment income, so to say, to catch up with those higher, more than 100% combined ratio, as it is called in the insurance industry, which basically means for every dollar you earn as a premium, how much in pay you pay for in claims and expenses. So that is one area. The other area was losing customers to others, because other competitors, in the sense other insurance competitors, traditional insurance competitors, because you know, Sanjay alluded to in the very beginning, that insurance is a highly, very low touch point business, and therefore you don't get to know the customer very well. But at the same time, on the claim side, it's an acid test. One bad experience with a claim, the next renewal will not come through, and you can't do much about it because of the low touch point. You don't have even opportunity to say sorry and make it up for the next, claim. And a claim is a matter of uncertainty, and you don't even know whether the next claim is coming during the lifetime of the policy. So it was more about customer retention and attrition management. So that is where the analytics was focused. The third area where it was focused it would be in the claim side. Again, it was inward focus, not so much thinking about the customer, but more about reducing the loss costs. That means trying to plug the leakages due to fraud, improving the recoveries through analytics on the subrogation side, which is basically stepping into the insured shoes and recovering from the liable third parties. So those were the kind of things which were more inward focused in the insurance. What dynamically or diametrically changed in the last few years, and again, some of the speakers today spoke about it, that the customer's expectation at the beck and call. I mean, you are getting an Uber coming to your doorstep, and you have the option of choosing the type of vehicle you want to board and all of that. I mean, come to think of it, and isn't it an irony that an auto insurance, or the motor insurance as we call in India, you go to buy a car and you try to decide on a car, you have first of all various brands available, and then you have variants within that. So whether it's a hatchback, sedan, or an SUV, and within those, again, you have so many options available, whether it's an automatic, manual, six-seater, seven-seater, with a sunroof, with this, that, and all. Come to think of it, that when you buy a policy for the same vehicle, you don't even look at it. Your dealer, parcels in or packs in a policy on auto insurance, and you are covered. You don't even look at it. So the subject of insurance has much more variety than the insurance as a product. And therefore there was not so much focus on customer. But what is happening, and that is where the transition of insurance is happening, is the entire focus is now on the customer and the way customer perceives insurance. And that is where and the traditional insurance industry, to my mind, is sandwiched between two competitive pressures. One is the new age insurance companies like the Lemonades of the world, or bought by many of kind of a very unique concept of creating cohorts and bringing in hyper personalization in terms of going to the granularity of risk as it can be, as it may. On the other hand, the large behemoths in the technology world, when Apple talks about, or Google talks about, and Amazon talks about getting into insurance, definitely it's a matter of concern, because they have the deep, two things they have. One is the power of technology and the data of customers they sit on. That's a huge thing, because and then every customer, and with a large database, as you know, the power of analytics is as good as its data. The other interesting thing which we many times overlook, that insurance is a business of risk, and the solvency aspect is very much regulated across the globe, in every country, every state. That means you are collecting premium from various prospects or various customers, and then you have to make good their losses when there is the time comes. And therefore there are times when there are times when insurance companies traditionally earlier, they used to get liquidated because they are not able to pay so many claims. Now, when these large technology companies are coming in, one thing they have in abundance is, first of all, I would put it like, is a deep pocket, and they are sitting on cash piles, so they can take the risk
Right.
and actually mature the analytics driven insurance as a product. So they have the wherewithal, unlike the traditional insurance companies. So I think the way I would put it, and giving you a cue to move to the second segment of your thing, that insurance industry, I think, is moving from an adoption of analytics towards the adoption of AI. I think that is the journey insurance industry today is taking, to my mind.
Right. You've already made us move to the second segment because the kind of examples you talked about, Shubho, were the ones I was trying to highlight, which is where I think the segment is more about this reimagine, more about the art of possible. And you mentioned about Lemonade, Ping. Now, platform companies, I mean, insurance platform companies like this and many more have given a run for the money to the incumbent insurance place. So that's one. And you also mentioned the Apple, or let's say the Amazons of the world, and very soon even the Ubers of the world, coming and kind of really opening up that treasure trove of data to derive insights, and also putting in insurance as part of a larger product portfolio for their existing customers to kind of take it, kind of a thing. So there are new avenues which are emerging. Now, that's the piece which I want you to park and cogitate and mull over, that where all in this whole art of possible analytics AI will open up new scenarios, applications, and adoptions. So anyone can start, please. And now we're talking about a future forward scenario. Maybe if it exists today, that's fine. We have discussed. But if it doesn't exist, but there is a hypothesis you want to create, leveraging analytics AI, feel free to kind of dwell on that also.
Let me just add to where Subroto left, and I think it's a very valid point that technology companies may end up driving banking and insurance industry if these industries themselves don't step up to come to the customer expectations, what customers are expecting, because they are working with Amazons, Ubers, or Googles and Facebooks of the world 80% of the time, and when they go to banking or financial or insurance company, they don't see that kind of a customer experience, so they are not that happy with the I would say the parent companies, the way they are offering. The only difference what technology companies can make, as Subrata rightly said, that they have technological power. The way Alipay is driving China's financial services, that can happen to any other country as well. And I think India is picking up big time in Paytm.
So
Similarly, I think
let me
insurance
just
should.
chime in, Shivani, and this is something which is a aspect I was trying to touch later, but I think it will be crucial to touch. And Shubho, you alluded, and Shivani, this whole piece around regulation and risk and compliance. Now, in a traditional format, very, very compliant, very, very, I would say, rigid about some of these policy and frameworks. How do you see this risk and compliance coming up to the terms when we are talking about the new age insurance firms. Any viewpoints over there, please?
Sure, let me take a stab at it. The insurance is a highly regulated industry. I mean, if I take the US market, not only, of course, in India we have the IRDA, but in a complex and a large country like US, you not only have to file a product for the national level, but at the state level as well. And there are state level regulations. So there are, funny terms like New Jersey auto or a California auto as insurance, variants, I would say, available there, and they are complex, and because of the particular state regulations, because of the driving pattern, because of the legalities and the liability acts as well. Because ultimately, insurance, as I think Sanjay also made a point at the beginning, that ultimately we are making a promise. To stand by that promise, one needs to be very careful. And whenever we talk of any kind of being careful, there comes the regulation that somebody has to look after the products you file and that the rates you charge, because ultimately, depending on the price you are charging to your customer, your ability to pay a claim arises, and an ability to sustain or what we call as assume the liability arises, and therefore it is very important. The other aspects of insurance which is coming up very importantly, as good as any other industry today, but insurance, it is becoming very relevant in today's world. Insurance is a very personal product, because when you are talking of covering a home for fire and all, you need to list out all the contents of the home, right? So when you are taking a bank loan, the bank is not really interested, what are the furnitures, or what are the, how many gadgets you have at the home, how many rooms you have and all. And in insurance, that is there. When you talk of health insurance, it gets access to your health records and all of that. So the other aspect of regulation is the data privacy piece, because that data is the power is powering the insurance up to yesterday, as well as the new age insurance, where as we move towards AI, and therefore large amount of data. But at the same time, the customer is the owner, or the is the owner of that data, and insurance companies are nothing but custodians of those intimate data, I would say. And therefore, that way, regulation is putting its claws around insurance companies even more than perhaps the in other sectors.
Sure. Sanjay, your take?
Yeah. So adding on to what Subho just spoke about, see, I think so. If I just take a step back, the evolution of the entire insurance is also the way the entire data and availability of data has been coming through. What I mean to say is that 5-10 years back down the line, so I would say that insurance was much more like a push product. Now, when we pick up a developed country vis-a-vis a developing country like India. So everyone's expectation from an insurance product is typically that, if I give in certain money, I should get something back. So it was always a kind of a push product wherein insurance was sold to you rather than a customer coming and asking for a insurance. Now, given that was the kind of that is the kind of a scenario till now, the regulation and the regulatory frameworks is quite strong even in India. So, for example, like in life, for every product that we go and file, you have to first take clearance from IRDA. They're going to go through the cost structures, they're going to go through the pricing, they're going to figure it out at what all is it. So it's being mentioned that it's a highly regulated thing, and the second important aspect from the regulation point of view has also been is that any particular case of misconduct or any specific case of missale. So they have empowered the customers to come back to the regulatory authority and say that, okay, hey, you know what, this I never understood this particular product and I was forced to buy this particular thing and now I want my money back. So an idea is going to come back and give certain penalties. So the idea fundamentally has started becoming is that how, as an insurance company, can you become proactive? How do you ensure that some of these negative publicity can be avoided by leveraging AI ML in across your value chain? So, for example, when someone is being sold a particular policy, we are actually essentially trying to figure out really is this policy as per what the customer needs are. Now, that's a tricky question to to answer, because technically when the sale is happening, you don't have capturing so much data elements. So you have to go into surrogate stat as to maybe what is the life stage of a customer, what is it that he's really asking for, does he have the premium so much capacity to pay certain premiums or not. And there are certain models which are going to predict that, okay, hey, I think so this customer has been missold a policy, why don't we double check and so forth. So the important point that I'm trying to make is that as and as the expectation from insurance companies is changing, as and as the product constructs are changing, the data and analytics is becoming more and more important. So 5 years back, everyone used to have a, what you used to call as a premium return policies. So I pay up if a particular person survives his with certain IRR, he will get a bonus in something, but the premium is gonna come. But now, fundamentally, what is happening is that there are so many investment opportunities where a particular person can park his money and only look for pure term insurance, which means that if something happens, which are highly cheap, and the way the product is being designed is that you have to have that quite an accuracy in terms of pricing it. Now, in such a scenario, when the customer is actually only looking for pure insurance, as a company also you have to think that how you can better underwrite him. How can you provide him an entire ecosystem where you start capturing more and more information about him in terms of his health, in terms of his what his what all things he are doing, and how you can price the product better.
Right.
So the way it is evolving is that rather from having a pool of insurance and cutting it at certain cohorts, the idea is that how you can actually go and give a particular product which is absolutely price basis your your usage, your behavior, and your the way you're performing, in the sense that your entire persona of you. So Sabir, think of it in this manner. I think
So
so.
I just want to interject, Sanjay, since we want to cover a bit of more spectrum of themes. And you mentioned about being active, and there is a cross selling which is always involved. And that's a question to you, Javed. Do you anticipate Uber drivers to start selling insurance in the time to come?
Uh, it's hard to anticipate, to be honest. But yeah, I think the other thing can happen, which was mentioned in the beginning of this conversation. I forgot who brought this point, but I think
Sure.
probably you only did that. That Amazon is already doing it, and Uber may start doing it. So yeah, if you discover that you have to pay a necessary cost on certain service, and you can integrate and start doing it by yourself, definitely. And given the kind of user base Uber has now, not just in drivers but also on couriers, restaurants, etc. So it's been increasing day by day because we've been inquiring a lot of other companies and kind of increasing the breadth. Right, it makes sense to integrate the insurance as organic service than to tie up with external partners.
Got it.
So, Samir,
And
one
this
aspect I would like to highlight
one second,
is
Shobho, I'll just complete this because I'm
sure,
sorry,
sure.
just
Sorry,
trying to
sorry.
get some perspectives around. So, on the art of possible, where do you think, Sudhir, this entire insurance industry, and I've heard regulated word multiple times out here, which means there is a cautiousness when it comes to trying something new. But maybe it's like the new platform players are throwing that, I mean, in a very different way. Uh, what do you believe in terms of the art of possible, the new use cases of insurance could be, and that's where we could see the leverageability of analytics and AI.
No, absolutely. I think let me take an example. Tesla is already offering insurance, for the drivers today, for the owners, right? And it started happening in Texas, and it's very transparent. The number of time, you have a score from 0 to 100. The more the score, the more safe driver you are, and therefore your risk is low, and therefore your premium will be that much low. And it's going to be very interesting how Tesla plays this one out. I'm damn sure that there's a lot of modeling that's gone behind it. Underneath this, all data is coming from the Tesla vehicles itself, right? How many times the forward collision warnings have been given, how many times the hard braking has been given. So it's going beyond just determining the safe score and translating that into a an auto insurance and selling it back to the owner itself. And over a period of time, I'm damn sure that Tesla will move into other areas as well, and it's building on its rich repository of data. That's number one. I'm just giving one example. We talked about Lemonade. Their claim to value proposition is the speed at which they will process the claim and give it back to their clients, and powering that. The speed is all their AI engine behind all the vast amount of data that have collected over a period of time, the probabilities that they've estimated for every claim that has been filed in whatever dimensions that you look at, whether it's from a geographical or ethnographic or any other ways. Okay, but the claim to fame is about speed, and you will see more such fintech and insurtech firms emerge. Google is not going to be falling far behind us, but they've acquired Fitbit. They have vast access to a treasure trove of data from a company like Fitbit, which they can actually use and up, making it much more transparent. Today, when I go and buy an auto insurance or I buy a health insurance, as a customer, I have no clue what I'm signing it for. The terms and conditions are not so transparent. So it's going to be the tech basically calling the shots and making it that much more transparent for the clients. And also, what clients are also experiencing post the pandemic is they expect more of the insurance, what they signed in for, basically usage based. Small and medium owners are basically demanding that if my firm is shut for in a week or 2 weeks, will I be compensated for the loss of income today? The questions they never asked their insurance earlier, but they're now asking that. Same thing at an individual level. If I experience a job loss because of the pandemic or because of any event that is unforeseen, can I be compensated for the loss of income? So even the products, which are evolving at the pace at which they need to evolve, anticipating the customer needs, are all going to be powered by AI and analytics. Okay, and it's going to be extremely one vast area where I think AI and analytics is going to play a significant role is in the application of deep learning. And deep learning, it's very hard to explain the outcome of it. If there is a single objective function that price has to be lower, deep learning can do far better. With the vast amount of data, and I think the insurance players are knowing this. Doing a lot of R&D over this, and this is an area which is ripe for explosion in some of the years to come. And I
Sure.
think it might
So,
lead to insurance companies themselves making super apps so they can collect a lot more data from their users and bake that in, push through the deep learning and really discover a golden pricing point for the premiums.
great,
A lot
great.
of lot is possible with AI and
Sure.
analytics.
Shubho, sorry I had interjected. Please
Oh, no, no,
continue.
that's
You were
okay.
saying.
So I just wanted to make a point about the combination of what Javed was talking about, the Uber piece, and then Shivani talked about usage-based insurance. So one of the areas where in the recent past insurance companies have been moving, and then that requires a huge power of AI there, large-scale machine learning and deep learning, I would say, is the micro insurance or pay just-in-time insurance. And that means basically either you are boarding a flight or boarding a Uber car. How do you get the passenger covered for that duration of the trip? Because that's the hyper personalization I was talking about. It's not just the personalization meeting the customer's particular demographic nature or any particular other aspect, but just the usage piece itself. So that is the granularity where we are moving, and that is the power of AI coming into play. That means insurance is not a plain vanilla over the ear product, but it is there when you need it as you need it. I think that is a significant change in the outlook of the insurance industry, which is happening. The same is happening in the health insurance or life insurance side. The wearables, the sensor data from the wearables, that is impacting that just as you drive, as you live. That means if you are living healthy, living a active life and all, there are programs like Vitality, which started with Discovery insurance company in South Africa and later adopted by many other or other co-branded. So it basically gives you Amazon vouchers or gifts and other things, adjusting with your premium at the end of the year, depending on how you lived your life for the last year or the duration of the policy. So I think those are the places where I see AI really impacting as we move forward, and it has already begun happening.
So
Wonderful.
actually, Samir, if
Yeah.
just to add on to this particular thing, see, the way the power of AI and analytics is that it's like, kind of changing the underlying way the industry performs. So the industry has always been pooling of risk. Now we are moving to prevention of risk. So when you
Hmm.
talk about this entire telematics and all, see, there will become a time wherein your roots and everything will start coming from insurer, which will say that, okay, typically we have seen that you follow this particular thing. This is what you should do. And because we see there are less number of way that people are driving, lesser number of accidents. If you pick up health insurance with like Vitality, like all these health sensors from Apple Watch that they're giving, they're trying to move you away towards prevention of risk. Can you live a healthy life? Can we ensure that you adhere to the, if you are, suffering from something, can you adhere to the treatment? So that we will eliminate or reduce the chance that the, risk comes through. Same is happening in that, life insurance as well. Let us bring people who are healthy. Let us ensure that they remain healthy by, giving him, motivating him to remain healthy by probably giving him this like vitality program, health and wellness. Can we create an ecosystem wherein he is incentivized to stay healthy? Now, all of these things, when we talk about it, except for PNC, because PNC becomes like a lot of it's depending on nature. But when you pick up these three broader lines, the entire perspective of insurance companies have become is not just a pooling of risk, prevention of any future risk that comes in. And that's where the power of, interconnected devices, power of sensors, and power of data and AI comes through. That how we make that transition happen. So that's a big shift. And when you think of that in that manner, you will see the art of possibility is immense. You talk about most of the use cases, it will start training because it starts giving you behavioral nudges. Every app starts giving you a nudge that, okay, you have not done your 10,000 steps. Maybe it's time to do these things. And that's where the entire behavior of a customer is being changed to live a much more healthy life, to ensure that they remain, healthy, and there is like lesser risk that's being come. And that's where the entire fight of, example of Tesla, the data becomes the game.
Yeah.
How much you know more.
Yeah. No, I think these are very pertinent points because the whole idea is you can see in terms of me trying to elicit responses. Look, it's not what used to happen in the past where disruption or transformation in insurance used to be considered like a taboo, but it's today a given thing. And as Shubho, both you and Sanjay articulated that, look, the the cautions the caution environment stays, the whole aspect of risk and regulatory stays, but maybe the art of possible gives you leeway to experiment more in terms of personalization, micro segmenting, and which is where the new platforms and products will unveil. Now, I want to ask one question, and this is a bit elevated since we're talking about art of possible. I'm taking it a notch above, but I want a spiel, which is like a 10-second answer from each one of you. How do you think this whole world of insurance will evolve in the metaverse or Web 3.0 phase? How do you think this world of insurance will evolve in the metaverse and Web 3.0 phase? Very quick answers from all of you, please. And again,
Um,
this is again to the next level we are talking about.
I think it's a. I don't know the metaverse just on this part, but future I would say it's fully automated and but no human intervention needed in the entire value chain.
Nice. Javed?
I think claim has to be very faster. As a consumer, I can say that. Otherwise, there are some startups like Insurance Samadhan. They will take away big market share from the consumers on that front. So the
Okay.
companies themselves will have to make it faster.
Okay. Sanjay?
Yeah, so I think so. I would just put in maybe insurance against your virtual reality avatar. That's it. In the metaverse. Something happens to you. You don't get certain services. You get insurance for that as well.
Great. Sudhir?
I think it's there is going to be a big disruption in terms of how you experience the insurance products, making it that much more transparent. Maybe Metaverse will challenge us to make these products that much more fair and transparent, and underneath back end of it, all of the action that happens uh, AI will be forced to play a very strong ethical role in making these products viable, fair, and very objective and meets to the needs of the customers.
Great. And Shubho?
I would use three, just you use three AI, so I would use three I, which is integrated, immediate, and intricate. And let me explain quickly. The integrated means insurance today is a product which we buy and forget about, but it will become more and more integrated with our lifestyle and demands of life. As I talked about the micro insurance, just in time insurance, that is one. Second is the immediate piece, and we talked about the claims, and I think Javed alluded to it very importantly that because it's a financial product and then just trying to help me in my difficult time, how quickly I get my claims, how quickly get my policy issued across the entire zone of insurance operations. The immediacy will come in and AI will impact that and enable that. The third part is the integrate piece, which is basically the complexity because of the inherent risk aspect of it. It has to be very, very cautious because every analytics or AI is coming. It cannot be a black box thing. And that is where the metaverse thing will come, that it will challenge because the whole liability, just imagine the autonomous cars driving. You are in an autonomous car, I am in an autonomous car. If there is an accident, who is responsible? Is it Samir or Shubho? Is that their insurance companies, the car manufacturer, or the algorithm? So there are so many possibilities, right? That is one. The other part of the intricacy comes with what just Sudhir mentioned is the ethics piece. And that is going to impact hugely because of the data privacy, how you use the data, all of that is going to come. So it is going to be a whole wild world out there. And this will only make insurance product even more beautiful. Why I say more beautiful? Because I consider insurance as one of the major innovations of mankind. Think of many centuries ago, somebody decided that the ships, the return of the ships can be guaranteed or not guaranteed, at least in financial terms, by doing some mathematical calculations. I mean, what more of an innovation can you talk about in those age?
Awesome, awesome. I think if I just paraphrase this entire conversation, first of all, I think what all of you dwelled upon was very revealing. This whole aspect of everyone agreeing that look changes the order of the day, and irrespective of the huge regulations and a very cautious, conservative environment, what insurance companies enjoy, it's all about the new age technology, specifically analytics AI, impacting insurance, and that's a given reality. Second, I think I really like the examples what you put forward in terms of reimagining the art of possible with analytics and AI, because this is where I say that look, the use cases are humongous. I mean, Javed, what you talked about, and Sudhir, what you talked about in terms of the platforms, and coming from practitioners like Shubho and Sanjay and Shivani touched a very pertinent point around how this cross selling also helps. So I think somewhere it's absolutely imminent to our viewers that look, this industry is poised for a very, very attractive phase. And Shubha, that also what you endorse, because at some level, some industries have this catch the trend and then follow the curve. Some industries, like insurance, catch the trend late, but when they kind of embrace that, that's actually for a fruition and with much more with the art of possible. With that, I know you've taken time and squeezed time out of your busy schedule. Thank you so much. Very engrossing, absorbing. Must say I enjoyed this session thoroughly, and thank you so much. Thanks, everyone.
Thank you, Sumit, and thanks
Thank
everyone.
you.
Thank
Pleasure.
you. Thanks,
Thanks,
everyone.
Yeah.
everyone.
And
Great conversation. Thank you.
Thank you so much.